Welcome to Sophie Daddy's channel. Today, we are going deep and deconstructing an absolute legend. We just got our hands on the latest SEC filing from Stanley Druckenmiller, and let me tell you, it reveals a master plan in motion. This isn't just some boring portfolio update, it's a rare look inside the mind of a true Wall Street titan. Let's get right into it. 63.27%. Now that is not a return. That's a turnover rate. In one single quarter, Druckenmiller basically ripped up his $4 billion playbook and rebuilt it from the ground up. We're not talking about tweaking a few positions here and there. Nope, this is a radical high-speed overhaul. And the billion-dollar question is, why?
He doesn't just rebalance a little, he repositions his entire fleet. You have to understand, this filing isn't just a legal document, it's a treasure map. It's a flare being shot up by one of the greatest macro traders of all time, signaling that the rules of the game are about to change. And if we follow his moves, we can start to see the world the way he does. So here's our game plan for breaking this down. First, we'll look at the secret shuffle happening just under the surface. Then, we're going to decode his massive rotation inside the AI sector. After that, we'll dive into his huge, concentrated bet on healthcare. Then we'll uncover the macro key that connects everything, what I'm calling the Treasury corridor. And finally, we'll boil it all down into 5 crucial lessons from the master himself. All right, first up, the secret shuffle. So every quarter, big-time investors have to file something called a 13F, which basically lists all their public stock holdings. It's our one real peek behind the curtain into their strategy. So let's take a look at the top-line numbers from Druckenmiller's latest filing. Now, what's so fascinating here is what you don't see at first glance. The total value of the fund, the AUM, it barely budged. Looks totally stable, right? But look closer. He started 29 brand new positions while selling out of 33 others completely. This is not a manager who's sitting on his hands. This is a portfolio in a state of, well, controlled chaos. It is all about the churn. Okay, so let's get into our first major theme, because this is where it all starts to make sense, the great AI rotation. This is where we see the first piece of Druckenmiller's grand thesis in action. He's not getting out of AI, not at all. He's getting smarter about it, shifting from what he clearly sees as hype to what he believes is long-term utility. And this just lays it all out perfectly. On the left, you see what he sold, a complete exit from Microsoft, which has been a massive AI winner. He also dumped what you'd call the picks and shovels companies like Integris and Coherent. Now look to the right. That's where the money went, into huge new stakes in the mega-cap platforms. We're talking Amazon, Google, and Meta. He's cashing out of the richly valued early movers and plowing it into the giants he thinks will actually use and make money from AI at a global scale. So you see, this isn't random. It's an incredibly disciplined 3-phase strategy. Step 1, he sold the hype. He did this with NVIDIA last year when it got too hot for him, and now he's done it with Microsoft. Step 2, he kept his anchor. He's still holding a massive position in Taiwan Semi, which tells us he thinks it's the one piece of the AI puzzle you just can't replace. And step 3, he took all that cash and bought utility, the platforms that are going to weave this tech into our lives for decades. All right, now for the biggest, most eye-popping conviction in this entire portfolio. Druckenmiller has this famous saying, when you see a huge opportunity, you don't just dip a toe in the water, you be a pig. And right now, his biggest bet, by a long shot, is in healthcare. This is a total masterclass in how to bet big. I mean, just look at this. Nearly 30%. 30% of his entire $4 billion fund is packed into just 3 healthcare stocks, Natera, Insmed, and Teva. To give you some context, most funds would think a 5% position is a major bet. This is just an extraordinary level of conviction. He's not playing for small gains here. He is swinging for the fences. But here's the genius part. This is how he manages the risk. While the capital is super concentrated, the ideas behind the bets are diversified. He isn't just betting on healthcare. No, he's making 3 totally separate bets. Natera is a tech platform play. Insmed is all about drug trial results, and Teva is a classic turnaround story. This diversification of theses protects him if one single thing, like a new regulation, goes wrong. Okay, so we've got a huge rotation in AI and a monster bet on healthcare. So what's the common thread? To figure that out, we have to zoom out and look at Druckenmiller's macro view of the world. Every single move he makes is shaped by this top-down perspective, and this filing, it holds the key. And there it is, a brand new top 10 position in an emerging markets ETF. Now, this isn't a stock pick. This is a pure macro trade. It is a bet against the U.S. market continuing to dominate, and it's almost certainly a bet on a weaker U.S. dollar, which would be a huge boost for emerging economies. But why this bet, and why now, with so much conviction? Well, the answer isn't just in the charts, it's in who he knows. And this is the piece of the puzzle that almost everybody misses. The current U.S. Treasury Secretary, Scott Bessent, he's not just some politician. He's a world-class macro investor who worked right alongside Druckenmiller for years at George Soros's fund. Now, this isn't about anything illegal. It's about a shared worldview. Druckenmiller understands exactly how Bessent thinks about currencies and global money flows because they literally speak the same language. I mean, this timeline just shows you how deep these connections run. Druckenmiller and Bessent were basically trained in the exact same school of trading under George Soros. And now, not only is Bessent running the Treasury, but one of his key advisors is a former senior director from Druckenmiller's own fund. This has created what you could almost call a Duquesne Treasury corridor, giving Druckenmiller an incredible read on where U.S. policy is headed. That EM bet? It's a direct trade based on that insight. So we've deconstructed the what and the why of his portfolio. Now we get to the most important part. What can we learn from all this? Let's try to distill all this complexity down into 5 powerful, actionable lessons from a true master. So let's start with his most famous philosophy, one that flies in the face of pretty much everything they teach you in business school. Lesson 1 is that real conviction crushes diversification. Druckenmiller basically argues that spreading your money too thin is just a guarantee for average results. That 30% bet on healthcare is the perfect example. So the takeaway for us is pretty clear. When you've done the work and you have a genuine, high-conviction idea, don't be afraid to make it count. Don't dilute your best thinking. The second lesson is just as critical as the first. You can think of it as the antidote to the risk you take when you make those big bets. And that lesson is all about mental flexibility. That incredible 63% turnover rate we talked about, that's not a sign of panic. It's a sign of zero ego. He sold Microsoft, a fantastic company, without blinking because his thesis changed. The core idea here is that protecting your capital is everything. You can't hit home runs if you've already struck out. So the lesson is, you have to kill your ego, be willing to admit you're wrong, and move on. Fast. This third lesson really challenges us to change our entire time horizon when we're looking at the market. Lesson 3 is to invest in the future, not today. Druckenmiller is always thinking 18 to 24 months out. He knows that all of today's news, all of the earnings reports, it's already baked into the stock price. His big AI rotation wasn't about this quarter. It was a bet on who's going to be dominating in 2027. So the question we should be asking ourselves is this: what's going to be common knowledge in 2 years that nobody seems to get today? And that brings us to the final, and maybe the most important lesson of them all. This really is the core of his entire philosophy. If you remember one thing, make it this. So here's the bottom line. While most of us are buried deep in earnings reports, Druckenmiller is watching the central banks. He believes that the flow of money, liquidity, is what really drives markets, way more than any single company's performance. His entire strategy, from that emerging markets bet to the AI rotation, it's all built on figuring out where that river of money is going to flow next. And that leaves us with one final thought. If the greatest macro trader alive believes his biggest edge is understanding the flow of money, what are you focused on?
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.